안녕하세요. 4월 16일 화요일입니다. 미국 시장은 지난 금요일 큰 상승 후 약보합권으로 마감되었습니다. 필라델피아 반도체 지수도 약보합권입니다. Will earnings hurt or help stocks? 이게 CNBC 스쿼크박스 주제문입니다. 아주 적절한 표현인 것 같습니다. 부르기 싫었으니까요. 참고해 보시기 바랍니다. 유가는 소폭 내렸고요. 원 환율도 살짝 오르고 미국의 트레저리 노트 수익률 2.55%로 또 살짝 내렸습니다. 특별한 이슈가 없는 가운데 관망을 한 것 같습니다. 경제 지표는 뉴욕 엠파이어 스테이트 제조업 지수가 예상보다 좋게 나왔습니다. 원래 월요일은 빅데이터가 없죠. 팩트셋이라는 이 업체가 어닝을 최초로 마이너스 4.2% 감소, 레비뉴 5% 상승 이렇게 추정했던 업체인데 어닝 시즌이 순조롭게 출발했다, 견조하게 출발했다 이렇게 이제 평가를 내리면서요. 어닝 시즌 is off to a solid start 이렇게요. 그다음에 대략 한 85% 정도가 애널리스트들 그 추정치 상회한다고 이렇게 보도하고 있습니다. 쟁점은 아마 기업들 2분기 이후 전망들을 어떻게 내놓는지 여기에 있을 것 같습니다. 로이터에 따르면요, 미중무역협상에서 그러니까 딜을 위해서 중공의 그 보조금에 대한 미국 요구 사항을 워드 다운 완화했다 이런 표현이 나왔습니다. 그래서 흥미로웠는데요. 중공의 그 불공정 비즈 팔리시 그 바꾸겠다. 그 이제 타겟이 보조금이었는데 이러한 그 미국의 목표가 좀 희석된 것인가? 이게 이제 그 이런 그 평가가 나오기도 하고 그러는데요. 그 보조금 폐기에 대한 중공의 반발이 워낙 세다. 그런 그 반전인 것 같습니다. 근데 이 부분은 과연 그렇게 될지 두고 봐야 할 것 같습니다. 예. 중공이 그 보조금 정책 변경 이거 완강하게 저항할 것이다. 마지막까지 대들 것이다. 이런 거는 협상 초부터 나왔습니다. 그래서 아마 트럼프가 지난 워싱턴 회담 후에 대략 한 4주에서 6주 후에 딜이 될지 안 될지 알 수 있을 것 같다. 그리고 만약 딜이 된다면 시진핑 만날 거다. 이랬던 것 같기도 합니다. 예. 그래서 미국은요, 이 보조금에 대해서 원하는 것을 얻지 못하면 그 옵션이 3개 있겠죠. 협상을 일단 깨버리든가, 아니면 더 연장하든가, 아니면 이 보도처럼 약한 딜을 일단 받든가, 이런 어떤 선택이 가능하다고 생각됩니다. 각 경우에 따라서 주가가 어떻게 변할지 지혜롭게 선택해야 할 것 같습니다. 저는 적절하게 해지하는 게 가장 중요하다고 말씀드리고 싶습니다. 가장 현실적이고요. 네. 요즘은 보험 비용이 매우 저렴합니다. 작년 말에요, 주가 저점 부근에서는 ETF 레버리지하고 인버스 2X 비교해보면은 그 당시에는 인버스 2X가 레버리지보다 비싼 시기가 잠시 있었습니다. 그래갖고 대략 0.8대 1 또는 0.9대 1 이 정도였던 것 같습니다. 지금은 2대 3입니다. 즉 레버 2개 팔면 인버스 3개 살 수 있습니다. 트럼프는 여전히 그 패드한테 금리 컷, 퀀티테이티브 이징, QE 실시하라고 이렇게 압박을 계속하고 있습니다. 대단합니다. 저는 트럼프의 주장이 옳다고 봅니다. 이미 여러 번 말씀을 드렸습니다. 그리고 재밌는 표현은요, 패드가 이렇게 잘 했더라면은 다우가 5,000포인트에서 10,000포인트 추가 상승했을 거다. GDP 성장률은 한 4% 수준 됐을 거다. 이렇게 주장을 하고 있습니다. 지금 재미있습니다. 그러니까 패드에 대한 트럼프의 압박이 계속되고 있는데 패드 어떤 정책을 펼칠지 주목해야 될 것 같습니다. 반면에요, 메들리 글로벌 어드바이저라는 이 회사의 벤 에먼슨이라는 분 참 재미있는 표현을 했는데요. 현재 미국 시장의 가장 큰 위험, 이거는요, 경제가 계속 좋아져서 그래서 패드가 갑자기 레이트 하이크 해버리는 거, 이게 아닐까. 금리 인상을 재개하는 것, 이게 미국 시장의 가장 큰 위험이다. 이렇게 주장을 했습니다. 저는 이것을 정말로 패드가 금리를 올린다기보다는요, 미국 경기 전망이 좋다는 것을 이렇게 표현한 게 아닌가 이렇게 해석하고 싶습니다. There is no risk of recession 또는 upward trend in GDP. GDP 성장은 계속될 거고 리세션 위험은 없다. 이렇게 이분은 평가를 했습니다. 재밌는 표현입니다. 자, 오늘은 여기까지 하겠습니다. 오늘도 신나는 투자하시길 바랍니다. 감사합니다.
-3 or 4%. So actually, everybody, why we call it negative growth, I don't know, but we're talking about actual lower earnings and not just decelerating earnings growth. Your view is that we beat that and are able to post flat or just slightly higher or just flat with last year?
Yeah, just flat with last year.
Which would be a beat.
Exactly. So about a 3% beat. Our view is that expectations have been reset pretty sufficiently. So they came down about 7% in the 3 months before reporting season, which is a much bigger ratcheting down of expectations than you usually see. The good news is that when you've seen something that dramatic before, earnings have consistently beat expectations by about 3%. And when you look at a lot of the macro data heading into the quarter, some of the results from the early reporters, it would suggest that we should see something like flattish growth this quarter.
When did the stock market sniff that out, that it's not going to be as bad? Because it has had a great first quarter.
Right.
So did it looked past the forecast for down earnings and realize it's not going to be as bad? And also the flip side of that is you think we've basically seen the best for the year for the stock market.
Right. I think a lot of the optimism has really been around some of the green shoots we're seeing on global growth, optimism around trade, potentially looking past the earnings. I think what'll be key will really be management guidance this earnings season. We saw that come down over the past several months. Same thing with CapEx guidance. That's picked back up a little bit, but the uncertainty overhang has really been what, could affect earnings going out into the year if corporates are really uncertain about what's going on with growth and trade, have been hesitant to spend. So I think paying attention to what management's saying and what they're saying about the economy, what they're saying about China, could really drive stocks. And some of the areas that have seen valuations come down a lot, positioning come down a lot, like industrials, like tech, that have seen some of the bigger risks. These are the areas that we think could see some of the bigger reactions if they do see good.
So 3,000, you figure we might get a print like that on the S&P this year, but we don't necessarily stay there. And 2,900 is fair for 2019. Is that what you think?
Right. 2,900's been our year-end target. We've said that there's risk that the market could peak out somewhere around 3,000 this year. So it could potentially be a bit more upside, but we think that the risk-reward for stocks from here is really, you don't necessarily want to buy the S&P 500 wholesale. You really want to focus on pockets of the market that are undervalued or where positioning is lower, or some of the cyclical areas that have been more beaten down that could see upsides.
Okay, David, your 2750 to 2950 range is for
now.
Would you call it short term or intermediate term?
For the spring.
For the spring. When is this? Spring ends in
June, late June, yeah. And I think 2750 to 2950 lasts basically till Labor Day.
2750 would get you a tab. Well, that would be about a 7%.
We would jump on
about
that.
5% pullback between now and the summer. That wouldn't
I'm not
surprise
expecting
you?
a pullback.
You're
Actually,
not. Then why put that lower point of the range in there then?
Because that's the fair value range.
Okay, 2750 to 2950.
2750 to 2950. I think by the end of the year, once we see signs in the third and fourth quarter that the U.S. economy is doing well and S&P earnings growth is back to 5% or above, I do think the S&P makes it to 3,000 by the end of the year, early 2020.
Does the economy need to improve globally to get back to 5% year-over-year growth, or are the comparisons easier?
I would say forget about acceleration, deceleration. The economy in the United States and the economy in China seem to be stable at very healthy pace of growth.
Okay.
And I'm feeling extremely good about the length of this expansion. I think it's going to be a 12 to 15-year expansion.
And where are we now?
I think we're in the 12th hole.
We're on the 12th hole.
I think we've got plenty of time left.
It was a bad one for some people yesterday.
Yeah, and I feel like people who were uncomfortable with this 10th year anniversary of the expansion should start getting very comfortable that the labor market's extremely strong. Last week we saw jobless claims at 196,000. It's the lowest in 50 years. And China is showing plenty of green shoots. The Fed understands this is neutral for now. I think we've got a lot of good things happening here. We need to accept the good environment. And I think, yes, the S&P has a little bit of upside for the rest of the year, but it's got more upside over the coming years.
Really? Okay. So even 2020, election year, with everything that's happening,
right.
you still don't necessarily...
I often talk about this expansion being 12 or 15 years approximately in total. I think if we get through late 2020 and we get a political outcome that suggests there'll be no material increases in taxes, I do think this is an expansion that goes beyond 12 years.
Yeah.
If I just listened to what you guys were saying without knowing what your price targets were, ranges were, I would think that you would be expecting much more upside this year.
They sound fine, but they
right?
got no,
but then the price targets indicate not very
Pretty
much
flattish,
more
even
upside,
below where we are.
The risk reward is not there. I don't really get it. I mean, if I'm just an average person out there, I'm thinking, well, why should I be in the markets at all right now if you're telling me the upside is limited, the risk reward is not there?
Right. I think at this point it's really about picking your spots, because there are certainly areas of equities where we do see upside potential still. I think, healthcare is an area that we had recently lowered from overweight to neutral because, the risks that multiple see overhang as we head into the elections. That's an area
political risk for healthcare.
Political risk for healthcare. But there are areas of the economy like the consumer, as mentioned, that are still very strong. We had recently upgraded consumer discretionary to overweight. That's a sector where, wage pressures are still a potential headwind to margins, but it's also an area that typically underperforms later in the cycle when the Fed's tightening. So if the Fed's on hold in the near term and the consumer, we're still expecting a healthy backdrop, that's a sector that we do see upside in the near term.
And the upside that we're describing is healthy upside. Too many people have been waiting for this great pullback, and I think many of them even missed it back in December of last year. Be in the market. The market has healthy upside for the coming years. Pick your spots, as Jill's saying. We like emerging market Asia. We too like China shares quite a bit. And if you're still looking for something that has outperformance potential in the United States, big banks, we've been on top of growth stocks. We like them still. And I think they continue to outperform for the rest of the cycle. For the most part, I think it's the communication sector that has the most upside in the short term.
So what's known as FANG, basically.
It is basically that.
Mm-hmm.